first thing that grabs your attention as you go through the financial news of your morning newspaper? Let me guess, it's about how markets are moving. You may have invested across multiple products, mutual funds, bonds, stocks, etc. But how would you know which are the good ones? Is there a benchmark with which you can compare? That's exactly what index does. It serves as a benchmark of comparison for your investments and also gives a sense of how the broader markets are performing. I'm going to tell you more about index in the next few minutes. But before that, if you enjoy our content, please like and subscribe to our channel and press the bell icon to get more video updates. No information, I guess, is more widely reported than the current levels of indices such as Nifty 50 or Sensex throughout the day. And there's a reason why we pay attention to get a sense of market direction. So what exactly is an index and what is it made of? A basket of securities such as stocks or bonds can make an index that will replicate certain segment of the market. You can also call it a subset of the broader market that will help determine the overall performance of the market. Broad-based indices such as Nifty 50 or Sensex captures the entire market and gives us real-time information about the health of the financial markets. Nifty 50, for instance, tracks the top 50 stocks that are listed in NSE or National Stock Exchange. Sensex, on the other hand, tracks the top 30 stocks that are listed in BSE or Bombay Stock Exchange. Indices can also be more specialized, that can track a particular sector or theme such as S&P BSE Healthcare Index or S&P BSE Metal Index, Oil and Gas Index, etc. They can also track a smaller segment of the market such as S&P BSE 250 Small Cap Try or Nifty Mid Cap 150 Try. Apart from tracking market movements, indices can also help us understand and evaluate the performance of actively managed funds relative to the market. Every mutual fund is tagged to a certain index or benchmark. However, mutual funds invest across multiple asset classes like equity, debt, gold, etc. So one common benchmark may not be sufficient for all investment products. Hence, an equity fund may have Sensex as its index, wherein a debt fund may have a composite bond index. A fund is called outperforming if it is performing better than its index and underperforming if it is below the set benchmark. Indices are not limited to tracking the evaluation of active funds. You can also do passive investing through indexes. Of course, you will not be investing in an actual index directly, but through index-linked investment products such as ETFs or index-linked mutual funds that would mimic the composition and performance of a financial market index like Nifty 50 or Sensex. Most index funds are considered to be low-cost way of investing and also offers good diversification. Benchmark indices can also be good reference points if you want to judge a mutual fund's investment style or its risk characteristics or performance potential. Benchmark indices can also help us assess the volatility of a mutual fund scheme. So whether you want to track the performance of a market or evaluate your own portfolio or want to invest in index-linked investment products, indices are certainly amazing financial tools.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.